All right, let's jump into it. What is going on with rates? Where are we today? We saw that like the last couple of weeks, we were
Mhm.
over 8%. Is that where we're seeing
Yeah,
it now?
pretty much. Yeah, and it's gonna be like this probably the rest of the year. But right now we're at 7.78. That's a 30-year fix. So again, it's just teeter tottering around this rate, around this range.
Right. All right. Well, at least we're in the sevens and not in the eights or over
Yeah.
eight.
Yeah, 100%, 100%. But we do have some big news that the Feds are meeting this Wednesday at 2 p.m. So the anticipated meeting. So hopefully, they put a pause to the rate hikes and we kind of just ride out the rest of the year. So
Got it. Okay. And so we will talk about that next week of
mhm.
what happened, what's going on, how does this impact buyers and sellers. And now for buyers specifically,
Yeah,
you and I have been dealing a lot with buyers and
yeah.
specifically with around closing costs. And
Hmm.
now a lot of people will say like, oh, you only need your down payment, your 3.5, 5, 10% down. But you and
Yeah.
I both know that's not 100% true, and they
Mhm.
actually need to account for closing costs. So how do you advise clients about what they should save for closing costs?
Yeah, it's a great question. Usually, the way I explain it, especially to first-time home buyers, I break it down that hey, look, seller has closing costs, buyers has closing costs. So typically, right now, this current market, I would say a 4% of the purchase price is a good percentage to estimate for your closing costs. And again, that's on top of your down payment. So if your down payment is say 3.5% down, you have to consider the 4% closing costs as well.
And in today's market, technically we could negotiate, depending on the home, we could negotiate that 4% into someone's seller credits, right? And get a bit of
Exactly.
the pay for it.
Exactly. So and again, probably this year has probably been the most transactions that I've seen where sellers are offering credit and not just a little credit. They're offering pretty large credits at this point.
Awesome. Okay, so we will stay tuned next week for an update on what's going on with the Feds. Pretty light this week in terms of any big news from a rates perspective. And yeah, just really helping buyers understand what they should expect in today's market
Mhm.
and getting ready for next year. Hopefully, we see some rate drops.
Yeah, 100%. I think one thing that we wanted to mention too was about, at this moment, what is more important, right? For especially you're planning to buy a house. And I just want to share this with you, Tiana. Is like we're running into a lot of situations where, clients need to know to save money for their, soon to be purchased, right? So that's something that's very important. Before you start paying off credit cards or any loans or anything like that, talk to your mortgage advisors, and that way they can strategize with you. Because the bigger picture is like, yes, we all don't want to be in debt, right? But the problem is we don't look at that debt. We look at the minimum monthly payment on these credit cards and personal
Mm,
loans and stuff like that. So again, save some money. Save some money.
cash is king.
Cash is king. Yes, yes.
Absolutely.
Yeah.
Well, thanks, Tyler. Appreciate the update for this week, and we will see you next.